Hey guys, this is the co-owner of Solace Analytics here, and welcome back to the channel. In today's video, we're going to be talking about what trading psychology is and how to implement it into our trades. Before we start talking about trading psychology, many beginner traders might ask when we would need psychology in trading. Well, it's actually really important. So what even is trading psychology? So let's start with a bad example of what someone with a bad trading psychology would have. So pretty much they would let their emotions such as sadness, happiness, or anger control what the outcome of their trade would be. So this can mean the buyer was too nervous and sold too early before the market really ramped up, or the buyer was too greedy and they holded it too long and the market did a reversal. A lot of beginners in trading do this, so how could you differ from them? Let's talk about the first step on how to get a better trading psychology. So, the first step is to find a trading plan. A trading plan is when you find reasons to enter a trade instead of just entering based off emotions. Another thing you can add in your trading plan is having a stop loss and having a take profit sign. But make sure not to put your stop loss too high because you might sell before the market moves heavily. Same thing if you have your stop loss way too large. If you keep on holding and the stop loss breaks, you'll just lose most of your money. These same rules can apply with your take profits. If you have your take profits way too low, you might just earn a few bucks before the market moves. Or if you have your take profits way too high and get greedy, the market may do a reversal. So how do you find the perfect stop loss and take profits? What I like to do is use support and resistance and other types of techniques to find the perfect spots. If you're not familiar what support and resistance are, I would highly suggest you watch the previous video. We just made a video just on resistance and support. Also, when using your trading plan, make sure you don't focus on how much money you'll make, but to focus on your stop loss and your take profits. The second way to better your trading psychology is to focus on only your trades. That doesn't mean to not take anyone else's trades or your mentor's trades. It means not to just join someone else's trade willingly just because they said it would work out. That right there is pretty much gambling. So when you do focus on your own trades, make sure you don't make too many trades and overwhelm yourself. So when you're making your own plans, don't make 10, 11 plans every single day. It's way too overwhelming and stressful to focus on that many charts at the same time every day. So what I do now is I do look at multiple charts, but at the end of the day of analyzing, I pick out my top 2, 3 charts that I think will be the most successful the next day. It's way easier to look at 2 to 3 plans instead of 10. And there's also a higher chance of it being successful than 10 plans being successful. Alright, moving on to our third tactic on how to have a better trading psychology. So we have risk to reward ratio. Something that you don't want to have is high risk to reward ratio. To understand what high risk to reward ratio is, let's use an example. So let's say currently you have $300 in your buying power. If you were to buy an options contract for about 200 bucks, and let's say your profit was about $1 above the stock price, you are risking 200 bucks just to gain $100. So you risk more than what you gain. So you want to make sure you keep a equal or low risk to reward ratio. So if your trade doesn't end up going your way, you at least don't lose too much of your money. Okay, the last tactic that we are going to use that will help better your trading psychology is something called loss aversion. Loss aversion is when you place more concerns on avoiding losses than trying the gaining of profits in your trades. Many times, the losses that a trader faces affects them more emotionally than the gains they gain. The gains they gain, even if they are similar. So, this leads to fear being created in trades that are minimal in risk. This is not a good thing to have because it might stop you from entering profitable trades just because you are on a small losing streak or you just don't want to lose on your trade. One thing to know is that trading is a long-term thing rather than a short-term thing. You will have winning streaks and you will have losing streaks. It's inevitable. But if you stick to a strategy that works, you will benefit in the long run and avoid loss aversion. So, you should stay the same emotionally in every trade that you enter. So, let's say that you do all of this, you do all the methods that we talked about today, and you get red days, you get multiple red days. That's okay. That means you're doing something wrong. So, take a break. Take a break from trading. Take take a week or 2 weeks off and just study and look at the market. Don't trade, just study and see what mistakes you made, see why it was wrong and better from that and learn from those mistakes so you gain more than you lose. Remember, the market isn't something you can just learn in a night. It takes multiple months, takes even multiple years to master it. So that sums up the video for today. If you have any questions about the trading psychology video that we had today, or if you watched the resistance and support video that we made a few days ago, please go to our YouTube page. We have our Discord server set up in there. So if you have any problems, or if you just want to learn options trading or just stock trading in general, we teach there in our Discord server for completely free. So please join our Discord server. Also, if you have any questions about trading, please write it down in the comment section and we will make a video about that. Thank you for watching till the end of the video. Have a nice day.